All right, I'm about to spill the tea, y'all, but shh, it's a secret. Don't tell anybody, because I'm about to tell you a way that you can buy a home for a third of what a down payment usually is, but with no PMI. Okay, it's not a secret per se, but so many people have never heard of this program because it's only about a year old. If you know someone who is buying a home this year, help a homie out and share this with them because it truly is super beneficial. So let's chat. Amanda Rivard, local McKinney Realtor here, and today we are discussing a major way to save on your down payment. Most people do a lot of planning before they purchase a home. You probably know the mortgage payment that you can comfortably afford, you're ready to handle the maintenance, and you might already even be prepared for the DIY projects you're willing to tackle ahead. I think one thing, and especially with first-time home buyers, that is more difficult to prepare for is the down payment because it can be quite a bit of cash out of pocket. For most, it can be an obstacle and a big one. After all, homes are not getting any cheaper and your down payment is a percentage based on the sales price. Most people are aware that with a conventional loan, your minimum down payment is 3%, and with FHA, your minimum down payment is 3.5%. That doesn't seem too crazy, right? For a $400,000 house at 3% down payment, you'd be looking at around $12,000 for your down payment. The one thing that first-time homebuyers especially do not prepare for is that if you put less than 20% down, you'll be responsible for paying PMI, which is private mortgage insurance, and on a $400,000 home, the PMI per year could be anywhere from $1,600 to $5,200 for the year. Traditionally, to avoid paying PMI at a house, you would have to provide a down payment of $80,000, and that's really not doable for a lot of people. So let's talk about this product and how, as a home buyer, it will make your purchase that much easier and won't completely deplete your savings account. Rocket Mortgage has a program called 1+. With this program, you can get into a home with as little as 1% down because you'll also be receiving a 2% grant from Rocket Mortgage. Amazing, right? Now let's get into how the program works and who qualifies for it. This loan option has several benefits. Most importantly among them is the ability to put down as little as 1% and get into a home. Like I said, Rocket Mortgage is then providing a grant of 2% of the purchase price. Under this scenario, you would enter your home with 3% equity with only contributing one of it yourself. Clients who qualify may contribute up to 3% toward a down payment, and you will still receive the 2% grant. So you could technically still put 3% down, but with their 2% grant, you'll actually go into a brand new home with 5% equity. This is available for both first-time and repeat home buyers. So there's no restrictions on that. There's no restrictions on where you can live or where you move from, and the program is available nationwide as well. But before we go deeper, let's talk about an example loan. We'll use a $250,000 assumed purchase price, 30-year fixed loan with an interest rate of 7%, which is average right now. You'd end up bringing $2,500 for a down payment, which is 1% of $250,000. Rocket Mortgage then covers 2% of the loan amount, which would be an additional $5,000. They are really bringing double to the table for you, which lowers your mortgage payment. Your monthly principal and interest in this example would be about $1,600. So how do you qualify? Because this is a conventional loan product tied to affordable housing goals, there are several requirements you should know about. Here's a brief rundown. You can't qualify if you make higher than 80% of the median income in the area in which you're looking to buy. For example, if you're looking to buy in Collin County, Texas, the area median income is $113,255. So you can't use more than $90,000 as your income to qualify for this because that is 80% of that $113,000. If you need to know the median income in your area, just Leave your county and state in a comment and I got you. You will also need a qualifying FICO score of 620 or better. This program is for single unit primary residences only. When combined with a 2% grant, your initial down payment can be no more than 5%. There is a $350,000 upper loan limit on this conventional option, meaning that is the maximum amount of the loan excluding maximum down payment of 5%. So that would come out to a max sales price of $367,500. Although there are income limits, there's one other important note to make. This is qualifying income. If you can meet debt to income ratio requirements without using bonus income or putting another borrower on the loan, it doesn't need to be included in your qualifying income. This could give you some breathing room as well. With this loan, temporary buydowns are also available. Temporary buydowns allow for the creation of a fund to effectively lower the interest rate for a year or more at the beginning of your loan term. These are allowed with this program if they come from an eligible source, including the builder, seller, or the listing agent. And I know it's quite a bit of information to take in, so if you have questions regarding this specific loan, which really is an incredible loan, don't hesitate to reach out. All of my information is in the description below, and I would be absolutely happy to have a chat with you. As always, like and subscribe for more relevant real estate information, and until the next video, y'all take care.